Hello and welcome into the KE Report. Shad and Corey here as your host, and today we're getting an update from Nick Hodge, co-owner of Digest Publishing and editor of Foundational Profits and Hodge Family Office. And Nick, always great to get you on the show just to get your thoughts on how you're looking at the wider range of markets and the macroeconomic factors, as well as pivoting over to the resource sector as we always do. I guess if we look at macro land, Nick, it's been a wild last couple of weeks and a lot we could dive into. I guess the main message that people are looking for is where do you go to hide? Where is the safe haven in the turbulent storm? Traditionally, people would pile into the US dollar, to US bonds, and also into gold. Not seeing a lot of action in the US dollar, strangely enough. It's had a little volatility. Bonds have been kind of a wild ride, but gold doing incredibly well, still up at all-time highs. Nick, what's your analysis on where should investors hide out the storm and ride out the storm?
All you got to do is look at the screen or the heat map and see where the green is, and there's not a lot on there here in the first couple of weeks of April. Gold has emerged as the signal from all the noise, and there's a lot of noise out there. So maybe we take a step back. It's been a month since we talked, and last time we spoke was in early March. The S&P had already corrected down 10% and was sort of looking for direction. And then, of course, we got the tariff announcement in the Rose Garden on April 2nd that catalyzed the next leg down in the S&P, which took it in right to the precipice of bear market territory, down to right on the line there at 20% down from its recent highs in late February, and now looking for direction and not a lot of support there. Meanwhile, a lot of volatility out there. I had mentioned the VIX index to you guys, in fact, the last time we spoke in early March, and I was giving you it as a caveat. We were talking about uranium, I think, and I was saying, barring something crazy happening like the VIX going to 40 or 50, those words actually came out of my mouth. And here we sit 30 days later, and the VIX is, in fact, at 50. And when the VIX is above 40, there's really no place to go. So certainly when it's at 50, you just sit on your hands, because the price swings in most asset classes can be so wide when the volatility is elevated that high, that it's just not smart to make moves. And certainly you've seen that if you bought stocks like late last week, for example, how they opened up early Monday, if you want to catch a falling knife. So, and what you say is true. Flight to safety is normally in the dollar, and yet the dollar is going down and to the right, while the yields, at least in the past day or two, have gone back up. So that's just reflective of the chaos and the uncertainty that's in the market. We've been talking about uncertainty for months now, and the haven has been gold. We knew that, central banks sort of front ran this, have been buying it for the past couple of years. And now you're getting the retail money coming in, you're getting ETFs getting bought up, and you're getting futures up around $3,100. So I think there's a lot of opportunity out there in different sectors, depending on your time frame and risk appetite. Happy to talk about whatever you want to talk about next in terms of macro things like inflation and growth, or specific commodities. So you tell me where you want to go.
How about the macro trend that it seems like we're seeing, where it's more anti-US? Money seems to be leaving the US, which is why I think bonds are still struggling, the US dollar is struggling, US markets are struggling, but that does lead to gold being not such a US focused commodity. Is that a trend that you're picking up on here, Nick?
To a certain extent, like heading into this second week of April, big sell-off in the S&P. Other countries were getting bullish, like Japan was looking pretty good. Germany was looking pretty good. There were some countries in South America that were looking pretty good, but even those have started to break down just from a price standpoint. I'm talking about just when I look at like their country ETFs, for example. I'm not really talking about, GDP numbers and inflation numbers. I'm just talking about bullish, bearish, looking at the chart. So they were. For a while, you could have put money in Europe, but even now, in the past week, with this volatility where it is, I've seen the charts on Germany break down and Mexico break down, and some Asian nations even start to break down, Singapore, for example. So no, even these emerging markets or developed European markets, I'm not seeing a lot of places to hide out there, except short duration bonds, short duration, quasi cash instruments, and gold. And I think that's what a lot of people are seeing.
Well, Nick, one more thing that ties in with macro and kind of the larger commodities complex is the renewed calls like we've heard really of 2022, 2023, 2024, and now 2025 that a recession is imminent. We've heard this for years, and it's not that there couldn't be a recession. It's just it's almost like the boy that cried wolf at this point, where the yield curve inverting was supposed to be the trigger. And then 2 years later, after it being inverting, it was the yield curve uninverting.
Yep.
There was the Hindenburg omens that were happening in the stock market that were happening at such a frequency that we're guaranteeing you that it was the Fed's rate hikes, hikes to cuts. It was all of those factors were supposed to trigger a recession. And if you remember, when we were talking a couple of years back, we had those 2 negative quarters of GDP back to back, which normally would have been a recession, but then they took the rules of what a recession was and they rewrote them and said that no longer qualified. So now there's calls for a recession. First of all, do you think it's going to happen? And second of all, how does that impact things like the base metals? Look at oil down in the 50s. It's kind of amazing what's happened to the oil price. How do you think the commodity sector is affected if we do have this quote unquote recession or contraction?
Man, it's so complex out there. So the most recent thing that was going to cause a recession, if you remember, was Doge and the cutting of government spending and laying off of government employees. I haven't heard much about Doge in the past 2 weeks. It's funny how now it's the tariffs, it's the global trade wars that are going to cause the recession. I don't see recession. So here's what I see. I see a definite slowing down of growth in Q1 US, which we just exited. We'll get the number this month. It's going to be likely a negative number. I don't think you get 2 consecutive quarters of negative growth in the US. I think you get this suck down is going to draw inflation down. And I was telling you guys this last month, we were talking about disinflation. I was telling you that eggs were down and coffee was down and chocolate was down after being in the headlines for months, and that it was a crapshoot for commodities in this disinflation because things were going different ways. If you remember, silver was up 33, 34. Copper was up last time we talked, heading towards $5, but uranium was down and nickel was falling off a cliff. And so this disinflation is now spilled over into other commodities, right? Copper has lost $1 in the past 30 days or whatever, and nickel continues to go down. You just mentioned oil at 4-year lows with a 5 handle on it in the $50 range. And I just said that growth is going to contract in the first quarter. But look, it's still early days and you're in the fog of war. Like the tariffs just went into effect today, April 9th, the ones that were announced April 2nd. So they can now be litigated right now that they're in effect. And you'll continue to get this negotiation and second level thinking, et cetera, right? It's not just here's the tariffs, global trade war, and this is the direction. Things are going to change. I think you see inflation and growth go back up in the second half of the year. I think you get a tax cut package. We already are seeing that the deficits and the debts are projected to go up because of the budget that the Congress and Senate is proposing that includes, higher debt ceiling limits and more tax cuts. And so, I think this austerity in terms of Doge is relatively short-lived. I think you get negotiations and a settling down of these trade terms over the coming 2 months. And I'm not saying that everything is all hunky-dory in the second half of the year, but what I am saying is that I don't believe you get a recession. And I think that this sell-off in the commodities I just mentioned, copper, for example, silver softness are areas to be deploying capital. So a lot going on there, I know, but I don't think you get a recession. I think what you're seeing is a stock market that was wildly overvalued in terms of, Case-Shiller PE terms. That is just now reverting to the mean, and then you're going to get a capital rotation, which, by the way, is going to be really good for commodities, and have been telling you that for months and months, that a rotation out of the overvalued tech names and into the hard assets and resource space was the way is going to go, and I still think that's the way it's going to be, and starting to see that here a little bit with not just gold itself holding up, but the gold equities as well starting to outperform the other sectors of the S&P. And oh, by the way, we're heading into earnings season, which we'll see those gold companies report with, a $3,000 gold sale price and falling commodity input prices as just outlined.
Yeah, the gold sector and the gold stocks have been the safe haven that we keep hearing they usually are. And quite frankly, the little bit of a sell-off we saw in the gold stocks it looks like it's been a really good buying opportunity. But further into copper I find so interesting, where in March it ran up all-time highs, well over $5. But the stocks really did not validate that at all. You look at something like COPEX, the global X copper miners ETF, that's at lows that we haven't seen since 2022. This is a multi-year low that we are seeing, again, in the face of a copper price that skyrocketed higher. I know copper's rolled over since, but the stocks never confirmed that breakout. Why are the stocks lagging so much when we are still historically in a pretty decent copper price environment?
Because nobody knows truly what the tariffs are going to be, and Trump himself doesn't even know. I think it was in early March when he gave that speech to the joint session of Congress, and he said that he had enacted 25% tariffs on copper, when in fact he had not done that. So he can't get it straight. And then last time I talked to you, I was mentioned that he enacted the Commerce Department investigation, the Section 232 thing. And then you just have this big question mark in terms of a slowdown in growth, right? Shad, you mentioned Dr. Copper before we started recording. It's been all over the place, right? In March, as you just said, Corey, it was over $5. We must have had a really robust outlook for the global economy from the good doctor. And then just 4 weeks later, it sheds 20% of its price from $5 down to $4. Oh no, we must be headed towards a recession. I think the doctor might have to go back to school for a little bit. What I see is just consternation among traders. And oh yeah, by the way, you had that whole sort of bifurcation between the COMEX and the LME over the past month, with people racing to get physical metal into the U.S. ahead of any proposed tariffs, et cetera. So again, in the middle of the fog of war for copper, but let's not forget, like, what happened to the structural deficit, and what happened to the energy transition, and what happened to vehicle electrification, et cetera, and on down the line. You've got to throw out all those, not just narratives, but real investments and momentum that's been made in those things. And I'm talking about the energy transition, to abandon the copper trade now. And so last time we talked, I was telling you that I was starting to look more closely, that I hadn't bought yet in terms of my macro portfolio. I was still in a third cash and was likely going to deploy into copper and silver in the coming weeks. And that's what I'm doing here. Like, I told you I was going to buy Freeport, and I've done that since the last time that we talked. And so I'm a long-term copper bull. What happens in the next 3 months with the tariffs, I don't know. But what I do know, and what I'm more confident in, is the supply demand curve for copper, and that's what I'm investing on, not the next 3 months of tariff consternation. And again, maybe there is a global trade war and a huge bear market and recession, and then we'll all have bigger problems than if copper's $4 or $5.
Well, Nick, another thing that's happened since we talked last was Trump put out an executive order on March 20th. It was titled "The Immediate Measures to Increase American Mineral Production," and it's basically focused on ramping up not just the development of projects, but helping with funding, helping with permitting. They're even talking about smelters in there, which I think is a far cry from what we're going to see in the U.S. We're losing smelters, not gaining them. But there is a lot of focus on mining projects. They name a lot of minerals in there. Some of the ones you think about traditionally, a lot of the base metals, things like aluminum and nickel. But there's also things in there about gold. There's things in there about copper. There's things in there about potash and fertilizers and uranium. So do you think that on the positive side, we've talked a lot about the tariffs and how those are kind of a negative wild card, are some of these executive orders around developing extractive industries something that you have on your radar? Is it changing the way you invest? Do you see any opportunities domestically over internationally? How are you looking at that?
I front ran the heck out of it, Shad. I was telling you last month that, a large portion of my career has been staked on this migration of the production and purification and processing of metals from east to west. I was positioned for it. I am positioned for it, and I continue to be positioned for it. There's a reason I chose FCX over Rio or over BHP, right? It's the largest, U.S. copper producer. I think that's going to matter going forward. I think it mattered before that executive order came out. It was just the trajectory of the way things were going. If you look at the buildup of animosity between Russia and the U.S. and China and the U.S. So that's the way it was always going to go. And Trump has just sort of catalyzed that. And so you can go down the line. Like you mentioned, gold was on there. Like I've been positioned in large gold developers in the Western US for a number of years, from Midas Gold, following it all the way through to Perpetua, which just indeed got its permit to kick off 2025. And I've been in a company called Revival Gold for a long time that now has, two projects in the West with economic studies done on them, one in Idaho and one in Utah that they just put a PEA out on that they say they can get permitted in 2 years. And so if these actions are real, if what Trump says is real, and there's going to be a follow through from the permitting agencies and the regulatory bodies, then of course it's going to be a boon for American producers, developers, and explorers of those metals. I mean, just look at the charts for things like Trilogy, for example. I believe the Ambler Road was specifically mentioned in one of the White House releases in recent months. And so, yeah, go down to copper. I already mentioned FCX, and last month I was telling you that this was sort of my thesis, and I mentioned names like Gunnison Copper and Arizona Sonoran, and this likely will be beneficial for the permitting process of things like Resolution that have been going on for a long time. So yeah, I think this is very real. I think that these things were always coming, and it's good to be right in that respect. I mean, the portfolio doesn't feel or look good over the past couple of weeks, but again, viewing this as a short-term blip to a much more robust, longer-term thesis. And I got to mention rare earths for a second, because that's one of those things that is, a harbinger of those. You want to talk about trade wars. I mean, everyone remembers, that's old enough to remember the rare earth boom of 2010, 11, and 12, and just how high those stocks were flying. And why was that? Well, think back, and it was because China said they were going to limit the export of rare earths, which they have an utter monopoly on. And flash forward over a decade to 2025, and they still have a utter monopoly on the production and processing of rare earths. It's one of the reasons you've heard Trump talk specifically about this in terms of annexing Greenland and wanting to strike mineral deals in Ukraine with Zelensky. And anyone that has been around the block or has watched the resource space generally, or the rare earth space specifically for the past decade, knows that you're not going to be producing rare earth minerals, heavy, light, or otherwise, from Greenland or Ukraine in the next decade, and likely the next 2 decades, right? The mineralogy gets complex. There's lots of hurdles into separating rare earths, as you guys likely know. And so, and oh, by the way, sorry, I'm giving you a long answer. Like some of the spec sheets to produce those rare earths, they've got to be produced like right to spec, and they go in very sensitive military applications. So I don't think you want to be giving China like your missile guidance spec sheets to produce your rare earth magnets to spec for that, right? No, you want to bring that into the US, and that's sort of how I'm positioned for. Yeah, there's MP Materials, and everyone knows about that, and that stock has actually done okay. But there's other ways to get in there and play these, let's call them micro trends, right? Like the rare earths is a tiny sector inside of the resource sector, which itself is a relatively small sector. But there's technologies being developed to leach these metals and recycle these metals and extract them from electronics that I think are very interesting, and that I think will be built in the US, and that I think will get US government support. And so again, I guess I'll stop there. But if Trump and this administration is serious about reshoring production of resources, those are sort of the types of stories and things I'm looking at.
Yeah, well, we've heard from the government, right? They are very focused on the recycling aspect, the refining aspect. Mining follows, but it seems like the government would like to see some sort of technology advancement, some more recycling going on. But Nick, what do you do when you see some of these stocks? Trilogy is a great example where it spikes up on the back of what seems like positive news, but the mining sector is so slow moving that you get these price spikes, and then stocks usually very likely fade back lower as everything filters through the system, as it takes time to get permits and even finance projects. Do you use those as buying opportunities, or do you reshuffle when, as you said, you front run some of these moves, they turn out to be correct? Do you take a little bit of profit?
Man, you ask me these poignant questions that I'm not sure I know the answer to. I'm waiting, like in the terms of the rare earth thing I just mentioned. Like, let's look at that for 1 second. I didn't mention the company. It's called Kotech. I think I financed it at 45 or 50 cents, and it's trading at 65 cents. So yeah, it's a win, but we haven't set the world on fire. They just put out a feasibility study for this rare earth recycling project that they're going to build in Texas. They're going to take the magnets out of hard disk drives and recycle them. Positive feasibility study, makes all the sense. We'll go through permitting over the next 18 months, and they're targeting revenue generation in 2027. I mean, I'm waiting. I've been right, but I think I'm going to be more right. I think that project's going to get built. I think that they're going to receive some sort of State Department funding. They're involved in some, government programs with the State Department, and so I'm waiting. In terms of things like Trilogy or Northern Dynasty or Seabridge, I mean, I never owned those things, right? Because I mean, it seemed like the only catalyst was significantly higher gold prices or a reversal from the government, and I don't like investing in projects based on things that are outside of the company's control like that, right? Like the company can't control what the government does about the road or the permitting scenario, and the company can't control the price. So I don't tend to invest in those stories. Like I'm not a shareholder of Trilogy. And then, gosh, other ones are still early. Like, sorry, I'm just going to talk my book. Is like some haven't even drilled yet. Like when we talked in March a month ago, I was telling you that I had already written more checks this year in 2025 than I had written in all of 2024 into private placements. And I was telling you that those were like copper porphyry plays in BC, for example. And when I look at those deals that I wrote checks into already in 2025, I'm still up on all those deals. Like they've come down from where they were trading a couple of weeks ago, but they're still up from the private placement price that we wrote checks in January and February, and they have catalysts ahead. So, companies like Hannon, which I've mentioned a bunch to you, like that's up to $150 million market cap, and it hasn't even drilled a single hole. Well, it's about to drill its two projects in Peru this spring. Same thing with a company like Kingsman, which I've mentioned to you a lot, and we were talking about with the acquisitions that were happening in Chihuahua and central Mexico last year with Los Gatos. Well, Kingsman we financed at 25 cents and it's holding up right at 75 cents. Again, has come down because it was an 85-cent stock, but still hasn't drilled. And so I'm waiting for my catalyst to play out. Like those two companies I just mentioned, Hannon and Kingsman, they both have to drill. The other company I financed early this year, Quartz Mountain Resources, which I mentioned to you before, they are drilling now. And so I'm waiting for results because that's why I wrote the check, right? I wrote the check to see what the Truth Machine was going to deliver. I didn't write the check because I was waiting for copper to be a certain price or a certain tariff to get enacted or whatever it was. And so that's what I'm continuing to wait for is the catalyst to play out for which I invested in the companies to begin with. So I don't know if I answered any part of your question there, but I hope some part of that was valuable.
No, I think that's great, Nick. And the idea that we're getting near the spring drilling season is a big catalyst for the sector. So maybe let's go there next. Like you said at the onset, we have the catalyst of Q1 earnings going to come in for the producers, especially for gold, to a lesser extent silver. But when you think about all the commodities, really, this is the time of year where up north in Canada or in some of the areas that are just frozen over and breaking up and thawing out, you're going to have those seasonal drill patterns where all the companies take the money that they did raise and they go out and drop it into the ground with the Truth Machine. Are you expecting this season to be more well received because there has been such a swirl of press around the importance of these commodities, or do you think that the macro news in the general markets may swamp any good news? How are you looking at this overall spring drill season?
I mean, I'm bullish. So when I look at gold at where it's at, and then I look at copper, even the pullback it's had, it was just at $5. I think the commodity complex is bullish. I think the overall thesis in terms of supply and demand and the shortages that we know are out there over time, I'm talking about 2027, 2028, 2030 for copper. Like that's why I stay invested in, and that's what I think this market is going to look for. And I think there's available capital that's come out of some of these other sectors that's going to be looking for stories that are generating good intersections and good drill results. And so I'm pretty bullish on this spring drill season. I think I know what I've got in terms of my companies that are drilling and that have identified targets. And I think they overcome, to answer your question specifically, I think they overcome any continued macro malaise that's out there. And it sort of also depends on, how long they sit on the results. If you really want to get inside the weeds, like again, I think this clears up in the second half. So I'm not sure I want companies to sit on March and April drill results until July, but it sort of depends on when the results start coming out as well.
That is true, but sometimes these companies, they either sit on them or sometimes they just don't get them back from the assay labs, which can be a real drain on the company. Nick, any certain areas then that you're maybe more excited about, that you see more action in terms of drilling happening this year in spring?
I'm excited about BC. I'll be a broken record here. Like Quartz Mountain is going to drill two projects up there, Jake and Maestro, this year. I tend to stay in the Western Hemisphere, so I'm excited about Peru and Mexico. Those might be not obvious choices, although I guess Peru has seen a fair share of positive news recently. But those are where those companies are that I mentioned, Hannon and Kingsman. I think Mexico is a bit misunderstood, and I think Peru is getting easier. So U.S., Canada, Peru, Mexico for me.
All right. Well, I think we'll wrap it up there for today because we've covered a lot of ground here. We've talked about gold. We've talked about the critical minerals movement in the U.S. We've talked a lot about copper. We've talked about rare earths. We've wove silver into the discussion. There's a lot of spring drilling on tap here. And overall, still, it sounds like a positive outlook on the commodity space as people do rotate out of other sectors and look for where the next catalyst could be. So, Nick, always great having you on the show. And for people listening in, if you want to get more thoughts from Nick and his partner Gerardo, definitely click on the Digest Publishing link down in the show notes. It takes you over where you can see their whole offering of different subscriptions. Nick, always great having you on the show to pick your brain and find out what's on your radar. And as always, looking forward to our next conversation.
Always a pleasure, Shad and Corey. Thank you.